All right, let's get right into it. Today, we're going to deconstruct the mind of a modern master of value investing, Christopher Bloomstran. We're going to pull apart his portfolio, dig into his philosophy, and really try to build a blueprint for how he sees the entire world of capital. Okay, right out of the gate, you have to understand this quote. Seriously, it's the cornerstone of everything else we're going to talk about. See, while most of the market is absolutely obsessed with the daily up and down swings, what they call volatility, Bloomstran is playing a completely different game. He cares about one thing and one thing only, not losing his capital permanently. That single idea completely changes how you look at every single investment. So who is this guy anyway? Well, Chris Bloomstran is the founder and chief investment officer of Semper Augustus Investments. And look, his reputation is built on incredibly deep, almost fanatical fundamental research. He's well known for his detailed annual letters, and many people consider him the #1 independent analyst of one of the most complex companies on the planet, Warren Buffett's Berkshire Hathaway.
You know, talk is cheap, so let's look at the actual evidence. The best way to understand what an investor truly believes is to look at what they own. And with Bloomstran, what we find is an intense, you might even say radical, level of portfolio concentration. Let's break it down.
This slide really tells the story. I mean, just look at how concentrated we're talking. As of the fourth quarter of 2025, a massive 25%, a full quarter of his entire fund is in a single company, Berkshire Hathaway. Now add in his second biggest bet, Dollar General, and you're already knocking on the door of 40%. His top 5 holdings make up way more than half the entire portfolio. This isn't your grandpa's diversification. This is pure conviction. And here are the specifics. You can see both classes of Berkshire stock, which combine to make that huge 25% position. Then you've got a defensive retailer in Dollar General, the consumer brand Decker's Outdoor, and a classic hedge against inflation with Newmont Mining. These are not quick trades, you understand. These are deep, high-conviction bets on a handful of businesses he knows inside and out. Which, of course, leads to the big question, right? In a world that preaches diversification is the only safe way to invest, why on earth would a master investor do the complete opposite? Well, the answer isn't really in what he owns. It's in why he owns it. It's all about his philosophy. You see, Bloomstran's entire strategy rests on a simple but really powerful 3-pillar framework. This is the intellectual engine that drives every single one of his decisions, and it explains exactly why his portfolio looks the way it does.
And here they are. First, a fanatical focus on what he calls intrinsic value purity. Second, an ironclad contrarian discipline. And third, a deep, deep appreciation for management quality. So let's unpack what each of these really means.
Pillar 1 is all about intrinsic value. Now, this has nothing to do with the stock price today or tomorrow or next week. It's about calculating what a business is fundamentally worth, as if you were going to buy the entire company. And it all boils down to one thing: the cash that company can produce over its entire life. And the way he gets to that value is by tossing out all the superficial metrics. You know, most of the market gets hung up on things like the P/E ratio. But to Bloomstran, that's just surface-level noise. He goes way deeper, analyzing a company's true, sustainable free cash flow. And why is that? It's simple. Because unlike reported earnings, which can be manipulated with accounting tricks, actual cash flow, well, that's a lot harder to fake. To him, that's the only number that really matters.
Pillar 2 is what separates the thinkers from the doers, contrarian discipline. Bloomstran is famous for his patience. I mean, he will literally follow a great company for years, just waiting for the market to make a mistake and give him the price he wants. When everyone else is giddy and euphoric, he's often sitting on a pile of cash, totally unbothered by the fear of missing out. And the final piece of the puzzle is the human element, quality management. He's looking for leaders who act like they own the place, not just like they're managing it. Are they smart about where they put the company's money? And this is a big one. Do they respect their shareholders by not handing out excessive stock options that water down everyone else's ownership?
Now, if you take those 3 pillars and you weave them all together, you find that they're connected by a single, powerful thread. The discipline to calculate intrinsic value, the guts to go against the crowd, the wisdom to bet on great managers, all of it relies on a single trait, and it's both his greatest weapon and the very reason his strategy is so hard for anyone else to copy: the power of patience.
He's actually given talks with this exact title, and it just perfectly captures his entire mindset, doesn't it? In a world that is constantly screaming, buy, 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 his greatest strength is his ability to calmly say no. That discipline to wait for the perfect pitch is a luxury most investors just don't have the temperament for.
But let's be real, this kind of patience comes at a cost. The math shows that over a 25-year period, holding all that cash while waiting for the perfect opportunity created a performance drag of about 1.7% per year. And in the world of compounding, that is a huge number. So you have to ask, is all that waiting really worth it?
Oh, absolutely. Because for Bloomstran, cash isn't just a defensive move, it's an offensive weapon. Just as he pointed out, during the market panic when everything plunged 30%, having that cash ready to go was, in his words, huge. It allowed him to buy incredible businesses at fire sale prices while everybody else was panicking and selling. That's when patience pays off, big time.
So what's the big takeaway from all of this? How can we apply the Bloomstran Blueprint to our own thinking, whether we're managing a huge fund or just our own personal savings?
It really boils down to these key lessons. Number 1, redefine what risk means to you. It's not a bumpy ride, it's losing your money for good. 2, bet on conviction, not just diversification. It's better to know a few companies extremely well. 3, remember that cash flow is king. Follow the real money, not the accounting story. And finally, number 4, your greatest, most powerful edge is simply your patience.
And that really brings us to the final thought here. It is so easy to go online and look up what a great investor owns. That's just data. The real challenge isn't copying the portfolio, it's replicating the mindset. You can buy the exact same stocks he owns, but do you have the conviction, the philosophy, and most importantly, the discipline to wait, maybe for years, and say no over and over again until that perfect moment finally arrives? That's the real question.